Hey, what is happening, Bulls and Bears? It is Friday. It is January 6th, 2023. Back with another dose of you-know-what economic reality. Let's get right into it. The markets, really, in all the years I've been looking at the stock market and the overall economy, this is the most disconnected I've ever seen the market. Today, a rally in the Dow Jones over 700 points. Let's take a look. All major indexes in the green. Now, here's the really crazy thing. Bad news is good news. Bad news is good news. So wage growth actually decelerated. That means it did not keep up with inflation. And not only that, it decelerated from the previous month's wage growth. So that's bad news. So in bad news, do the markets sell off? No, because now bad news is looked at as good news from an investment standpoint, because bad news means that the Fed is going to come in and rescue the market. Do you understand? So this is absolutely insane. And it's not just me saying this. Here's the details right here. Stocks soared Friday after unemployment data showed wage growth decelerated last month. Investors perceived the release as a sign Fed officials may ease their rate hike campaign. This is insane, folks. So people are out there investing, companies are out there investing based on what they think the Fed is going to look at as weakness. But that's a good thing, because now they're going to come in with low interest rates. And all that easy money is going to start flowing again. Quantitative easing, rock bottom interest rates are coming back. Wow. So what a market we live in, folks. What an economy we are looking at here. Now, just to be thorough here, there was actually a mix of bad news and good news. Now, the good news, the supposed good news, was that the jobs added number was higher than anticipated. But as usual, the headline is very deceptive. The jobs added, from what I saw here, 90+% of these jobs were one, part-time jobs, or two, second jobs that people had to take because of cost of living is absolutely crushing them right now. Right? And this is something that I don't really see anyone talking about, anyone in the local news, the national news, the business news networks, even here on this platform. I hardly see anyone talking about this, on this insane spin that we're seeing, where bad news is good news. These numbers that are coming out, the jobs numbers, are based on data that's really a negative thing. When people have to work multiple jobs just to keep up with the cost of living, that's not a good thing. But yet that's being spun into a positive, because they're going to roll that into the jobs numbers. Also, people working part-time, and some of these jobs are people already having a full-time job, and then they have to go out and get another part-time job. So it's a mix of part-time jobs, second jobs, and only a tiny fraction, from what I see, is actually someone taking a single job, full-time job. All right, now let's shift gears a little bit here from the stock market to what I would call is broad risk. And there's broad risk right now of something big going down in the banking system. We have an FDIC, well, not just one, we have several FDIC officials out there having a discussion of how they're going to break certain news to the public. And in this meeting they're talking about bringing the news out on a Friday night when banks are closed. That way people can't rush to the bank and get their money out. That's the way I see it. But FDIC making an important announcement, what would that have to do with? Well, let's see. The FDIC insures deposits. So if they're having a meeting on how to break certain news to the public, it almost seems like something big is happening behind the scenes. Something maybe problematic with the banks. Now, if you've been on this channel, you know that banks are already insolvent. The only reason that they've been able to stay in business is because the system has been structured to allow banks to stay in business when they really shouldn't. If they were a small business that wasn't propped up by the powers that be, by the money system, then the banks, all the banks today, even credit unions, would be out of business. Why? Because they don't have enough money to cover what they're actually loaning out. So it's only the system of fake digital fiat money that allows these banks to stay in existence. So as soon as any normalcy returns, if it ever does return, these banks are wiped out. Now we know there's an alternate dollar that the powers that be would like the population to take on, digital currency, the central bank digital currency, the CBDC. And this is going to be a new level of control and really no privacy. And it could really be a nightmare if that does get implemented. I think they will try to implement it, but I think we may see some pushback against that type of money. But let's talk about something more at home today on our front doorsteps, and that's the cost of living and inflation. Let's take a look at a few charts here. And this is the year over year inflation rate for several different types of items and expenses. Let's take a look at appliances first. We see that appliances have dropped, but they're still going up. So back 2 years ago, appliances year over year were up as much as 8.5%. Most recently, the rate of increase has slowed down. It doesn't mean that the prices are coming down. It just means that they're not going up as fast. And it's now between 1 and about 1.7%. Now that's appliances. Take a look at hotel rooms. We see that, yes, the rate of increase has dropped. At the peak, it was about 25% year over year, and that was insane. But they're still going up. They actually haven't dropped yet. Hotel rooms now on a year over year basis are up 3.2%. If things continue, as the consumer continues to get tapped out to a bigger level and more people get closer to the financial edge and bankruptcy, you're going to see this number go negative, I think, for both appliances and hotel rooms. Probably hotel rooms first because it's traveling and hotel rooms are less of a necessity versus appliances. Let's take a look at new vehicles. Wow. So at one point going up 13% year over year. We're now down, and this is as of November, to about a 7.2% year over year price growth. So price is not dropping for new vehicles, but let's take a look at used vehicles. And most of you know this, the vehicle prices have been coming down. Now, since this looks at a year over year number, we didn't go negative until just very recently, back in October, down 3.3% year over year. Now, if you just look at it month to month, prices have been falling since about March of last year. And of course, we kept you all updated on what was happening, the month over month price declines and price drops. Of course, this being a year over year number, we're just now seeing the cost of used vehicles go into negative territory as of November. Okay, now here's an interesting one. IT hardware and services. Remember with the work at home craze in 2020, with the whole health crisis and people leaving the office, going to their homes, we saw a big surge in IT, computer equipment, etc., office equipment. And look at the number now. It's actually been negative since April of 2022. So we're coming up on a year of negative numbers here, year over year numbers. And now we're down year over year as of November, down about 4%. So the big scary monster in the room, the cost of living inflation, we're seeing a little bit of relief, and we're going to see relief going down the road here, especially as consumers get more tapped out. And, how much further can people go at all-time high debt levels, debt growing exponentially like we've never seen before at any time in history. And, the buying opportunities are going to be out there. Unfortunately, a lot of the things that people have to buy that they depend on, energy and food, also insurance, that's not going to come down as far as I can see. So there's going to be a lot of things still costing more, but entertainment items, luxury items, including leisure, hospitality, and travel like hotel rooms, I think we're going to see prices come down to at least some normalcy. Now, what's normal? Well, to get back to normal, prices need to drop big time because the cost of living is so high now that people are forced to go into debt. All right, hope everyone had a good week. Happy Friday to everybody. We'll see you this weekend coming up here. We'll be back with at least one update. I promise you that. Depends on how the weekend goes around here. You have a family, you kind of have to fit things in here and there where you can do it. Thanks everybody for watching this report. Big love. Keep stacking. Like to hear from you down in comments. We'll be reading these tonight and tomorrow. Talk to everybody very soon. Keep stacking. Bye for now and peace.